Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Happy Friday, everybody, and welcome back to another episode of the Real Estate Investing Club. Today we have Joshua Kagan with us from Bonfire DAO. This is going to be an interesting podcast episode because we're talking about the blockchain and about how real estate fits into that. I'm going to say up front, I do not have enough information in my brain about this to be super smart, but Joshua does. So we're gonna hobble through this. Joshua's going to give us a schooling on how real estate, blockchain, crypto all fit together. Joshua, I'm super excited about jumping into this. Thanks for hopping on the podcast.
Gabe, thanks for having me. And just to set expectations, I am by no means an expert in blockchain or crypto, but hopefully I can elucidate some of the concepts.
Yeah, well, if you're a co-founder of a blockchain platform, you know more than me, so don't worry about that. All right, I told you before we got on here, we like stories. We like to start to where you got started. So take us back to the beginning. How'd you get started in real estate?
Really, on my mom and stepdad's side of the family, they've been in real estate for decades, and I just saw how my stepfather lives, and he calls it the rent collection business, or the check cashing business, where it doesn't matter if he wakes up at 6 a.m. or 10 a.m, money comes in every month. And I looked at that and I was just like really, really inspired by that. And so in 2000, I was living in the Bay Area, and in 2011, I bought a foreclosure in the Berkeley Hills, and it was a phenomenally lucky acquisition, just the timing of it. I'd never done one of these before. I rolled up my sleeves. I became the general contractor and redid the floors and the kitchen and stuff. And then, leased it up and became the property manager, and just kind of learned by trial by fire. And then I did another one. And then I started doing fix and flips, gut rehabs. And then I got into the BRRRR method, buy, rehab, rent, refinance. And that's kind of how I got into it, just by doing it.
Damn, man. And you did the work yourself? Like you were the contractor?
I mean, I had subcontractors, but I was trying to swing a hammer to the degree that I wasn't getting in the way of other people, just to learn it,
Yeah. I did that. One of my first flips, I did that myself. I've told this story on the podcast before, but I remember walking through, like I did the tiling myself, and I tried to do as much as I could myself because I was on a shoestring budget. And I remember walking through with the electrician or one other contractor that we had to hire out. It was me and a buddy that were doing this. And he was walking through the property and he was looking at the tile and he's like, man, whoever did your tile, you guys got screwed. That was a bad job. And I was like, God damn it. But hey, we're not, that's why we focus in on what we're good at. We stick to what we're good at because we can't all be general contractors like that. So that's cool. You got the experience. I mean, you got your hands dirty, you got the experience, you understood what you're doing. And you moved on from there.
Yeah, and to your point, I mean, I redid the tile outside by there was this jacuzzi that we took out, and it was so crooked and effed up that we actually had to redo it. So it's like there's something to be said about trying to do something ourselves versus actually hiring really good people to do it.
Yeah. And one thing, we're going off on a tangent here, but we're going to let it happen. I tried to do drywall. I tried to hang drywall. I had no idea how hard it is to make it look professional. Like getting the seams to look, smooth and get the drywall up there to be oriented correctly is a lot harder than it looks. So I'm glad we got some good drywall professionals out there.
Right. I'm glad we know what our sort of lane is to
All right. So Berkeley Hills, you did your flip. That's a really good area. I'm sure you made out pretty well there, especially if it was in the earlier years. When you went from that first flip, how did you kind of start to scale? What allowed you to go from that first flip to multiple flips to, it sounds like you're buying single families now?
Yeah. Well, keep in mind, this was my side hustle because I was working at a venture capital firm, and then I worked for Richard Branson when he started the Carbon War Room. I ran the global energy.
Fun. He's one of my heroes, man.
Yeah, me too. It was crazy to work for him. one of my heroes. I'm Losing My Virginity is like one of the most seminal business books I've ever read. And then I went to a startup called Clean Fund that was providing capital for energy efficiency projects and buildings. So I was, 80%, 90% of my time were my full-time jobs, and then doing this on the side. It was a lot of work, a lot of. So I don't know that I ever scaled it the way that I probably would have if I had been full-time. But I think, one of the things I have to, I feel like I had an amazing privilege that my stepfather lent me the money for the down payment on the first foreclosure, because that cascaded, being able to buy a house in the Berkeley Hills and have it appreciate as much as it did from, I don't know, 2011 to 14, and refinance and start. It's just like, it just changed the trajectory of my life.
Yeah.
I don't know if I hadn't had that access to that down payment, I'm not sure that I would have been able to do that. And that was kind of the impetus behind creating Bonfire. It was like, there's so many people who want to buy real estate assets who can't source a down payment because of student debt and a myriad of other reasons. How can we make it easier for people to own real estate?
Yeah. Yeah. And I definitely want to get into that because it sounds like a great product. But I totally understand where you're coming from. People say you can do real estate with no money. Sure, you can, but it's extremely difficult. And to have somebody like your stepdad to step in there and give you that leg up, give you the down payment to at least get your first deal done. Because once you get that deal done, then you can start snowballing it and build it into something bigger. I couldn't have done it without my parents. They helped me a few times when my pockets were pretty thin. And so those people that are there for us when we're just getting started are crucial. And it's good to hear that you had that. Yep. So let's move on. I want to hear about Bonfire. I want to hear about, I'm just going to throw words out there, tokenization and blockchain. That's what you put in your submission. And so I know that that's what we're talking about, but I don't know how they all fit together. Tell me about blockchain. Tell me about how real estate fits into the crypto blockchain world.
Absolutely. And Gabe, if you don't mind, I'll just tell a story of why Bonfire, like why we even created it, right?
Okay.
Many of my friends are in their 30s and 40s. They have good jobs. They make six figures a year, and yet they want to own a house. They were told, oh, you're going to go to college one day, you'll get married, you'll, have 2.1 kids, and you'll own your house. And for many generations, the biggest source of wealth for any of us was the house that we owned, right? Because borrow 80, 75%, and it goes up 6-7% a year. That's the law of compounded growth, right? And that's how people have these huge nest eggs after 20, 30 years. Well, unfortunately for our generation and people younger than us, who are coming out of college with huge student debt and interest rates that have doubled in the last year, and competing with private equity, buying up a lot of the supply. There's not a lot of opportunities right now to get on the property ownership ladder the way that historically it was able to, right? And then not even to speak of how much prices have gone up since COVID, right? And then, 25 million people turning 30 in the next 5 years, which is going to be a huge catalyst for demand, et cetera. So my co-founder, who came from India 10 years ago, started and sold 3 companies. He's just a brilliant technologist, but also an owner of real estate. We were like, how can we make it easy for people to get on the real estate ownership ladder, who might not have $100,000 for a down payment or $250,000, right? And we looked at how people are buying real estate now who aren't, putting money down for a down payment. And we saw that like there's platforms like Fundrise or there's REITs. But there isn't a lot of opportunity for everyday people like you and me to buy, have access to trophy real estate deals where they're, investing $1,000 or $5,000 at a time instead of the sort of $50,000, $100,000 minimums, right? And so that's high level what Bonfire is. We're a global community of folks coming together to buy interests in compelling real estate opportunities. Okay. Now, blockchain as a technology, let's just talk about what it is. Okay. Blockchain's a ledger. That's all it is.
Mm-hmm.
It's a chain of data blocks that are connected to each other. So like a ledger, I put, sorry, I'm going to geek out on this a little bit, but imagine an Excel spreadsheet where you put, Gabe, a number down, I don't know, 100. And then on the next column, on the row behind, next to it, below it, it's 110. And what blockchain does is it ties it together in a way that's immutable, that you can't alter it because it is, it is connected to these chains. So it's like to reverse the data is almost computationally impossible. So it's like just a much more secure, permissionless, frictionless way of recording data. That's how I would think of blockchain.
Okay.
And an analogy I find to be really useful is like, think of blockchain. I'm on a Mac right now, a MacBook Air, and it's like blockchain is an OS, the operating system, right? I think I don't know, Monterey or whatever the latest version is. And then there's these things that are built upon an operating system, like a browser, like Microsoft Word or whatever, Pages or whatever, Apple's version is. So those are applications. So blockchain is an enabling technology. It's kind of like the next internet. And there's going to be these things that are built upon them. It could be NFTs, it could be crypto, it could be a myriad of different things, right? Tokens are going to be one of them, and I'll go into what a token means. But a lot of people collapse they think that blockchain and crypto are the same thing. And I personally love blockchain and hate crypto. Most crypto projects are scams and rug pulls and are just out there to make founders rich at the expense of everyone else.
I definitely lost a couple, ten or $20,000 in that craze back in the day. I was trying the crypto craze, and it did not go my way. So I've got a bitter taste in my mouth about crypto. But if crypto and blockchain are not the same thing, then that's good.
Yeah, they're not. And I would just say, to folks interested in learning more, I got into crypto in 2017. Again, extremely lucky. It was because people smarter than me were like, oh, Joshua, have you heard of Ethereum? Two different people on one day. And I was like, oh, that's weird that two people would tell me about this thing I've never heard about that I want to explore it, right? So I ended up buying some, and then it went up, and that kind of stoked my curiosity more. Then I lost a lot of money investing in the other, quote unquote, the SHIT coins. And so I honestly do believe everyone should understand Bitcoin and Ethereum specifically. The rest of them are most of them are jokes. But putting crypto aside, blockchain is an enabling technology for us to be able to tokenize real estate. So what does that mean? It means being able to divvy up real estate assets into smaller demarcations called tokens. You could call them units. You could call them shares. Okay, the reason why we call them tokens is a token represents a physical interest, a real interest in the asset, but it's recorded on blockchain, and there's a smart contract embedded in it. What's a smart contract?
So a piece of equity.
Piece of equity. That's all it is. Yeah.
Gotcha. So, from what I'm understanding, it sounds like, and I might be putting words in your mouth, but it sounds like this could be a good way to do a syndication without having to do, well, I don't know. You tell me. It sounds like where this is going is you're going to allow people to buy individual shares, pieces of equity of a property without having to go through the traditional syndication process, or how does that actually fit in together in real estate?
Yeah, I'll explain it to you. So we actually just closed an allocation into a $60 million hotel repositioning project last week. And so it was in San Rafael, California, which is Marin County, one of the more expensive zip codes in the United States. The sponsor was buying a 4 Points hotel, 2-star hotel, for $38 million. And there's a number of reasons why it was a pretty compelling deal. But putting that aside, needed, I don't know, it had some debt, some equity, and usually the minimum check, the checks for his deals are, $100,000. We took an allocation and we syndicated through our global network of domestic, international, accredited, unaccredited investors who came together, and we sold a token for $2,000 representing an interest in the LLC. And so we're able to enable 50 people who otherwise wouldn't have, been able to have access to a deal like this to participate. And we were like 3.5 times oversubscribed within 5 days. And to the sponsor, we're just one check on the capital, right? Bonfire is their point of contact. They're not having to deal with 50 small investors, right? So we're just one LLC on the cap table. But the advantage to our investors through tokenization is twofold. One, it's a smaller, minimum investment size than historically would be available. Two, tokenization offers the promise in the future of liquidity. Because if you think about how real estate is bought and sold by going to county assessors, et cetera, it's very time intensive. It requires notaries and signators. But if you have an actual representation of interest that lives on the blockchain, we can trade back and forth instantaneously with fees that are I don't know, pennies or it's
Mm-hmm.
going to cost close to nothing. It's instantaneous and it's completely secure. So that's the big promise of tokenization in the future, is really being able to create a liquid real estate market.
Interesting. Okay. So from the sponsor's perspective, say I found a property, I want to buy it, and I want to use the blockchain to raise capital for the deal. How is it different? Like, what are the additional steps that I would have to jump through? It sounds like what, well, you tell me, what are the different steps that a sponsor, GP would have to jump through in order to use the tokenization, the blockchain platform versus the regular syndication model?
There's not a ton that they have to go through. I mean, it depends if they're syndicating the entire offering versus a portion of it. And to date, we've only syndicated portions of assets. We haven't syndicated. Actually, that's not true. We did a single family rental and we tokenized the entire asset. So basically, what a sponsor does is they figure out, okay, what is the structure of this asset? Is it going to be a fund? Is it an SPV, et cetera? The second thing is, who do they want to raise from? Are they open to having unaccrediteds on the capital stack, or do they only want accredited, right? So it's going to be a Reg D 506, either B or C, right? And depending on that, it's like, what are their goals? Is it liquidity? Do they want to have these tokens be tradable in a year or not? Because sometimes, sponsors don't want that. They don't want to have all these random LPs to be able to come in that they don't have a relationship with. So it's really understanding what the strategy is and intention of the sponsor. What's the goals? Are they trying to have access to a wider base of investors, and then kind of figuring it out from there?
Okay.
But we handle all the KYC, using acronyms, know your customer, which is, we adhere to all anti-money laundering laws of the US, all securities regulations. I mean, we're a completely compliant platform, and totally above board.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
So, and just speaking specifically of Bonfire, so you guys, your customers are both people who want to invest in real estate deals, as well as general partners who have deals that they need sponsored. So somebody listening to this episode who maybe had a deal that they needed to raise capital for, would they go to Bonfire, say, hey, I have this deal, I need to raise $100,000, can you guys raise it? And then you guys tokenize it, put it out to the public, raise the capital, and then put it into the project. Is that how it works with Bonfire?
Essentially, I mean, there's a couple of things. One, we don't charge the sponsor for anything, right? We're not charging them to put it on our platform. We're not taking success fees from them because, we're not a broker dealer. So we can't take success fees from them. What we do is we validate the asset in the sponsor and the business plan. We're like, okay, this is exciting. We like this. And then if it meets that criteria, my co-founder and I are going to personally invest in the deal, right? Because we're shit, this is, excuse my language. This looks like a great deal. We want to be part of it. And then we're going to bring it out to our community. And, what we do is we send out an email to our community, and within 24 hours, we have a very good indication of like what we think, although this last hotel one surprised us of just how much demand there was for it. But, we'll know 24, 48 hours kind of ballpark what the amount is. We'll go back to the sponsor, maybe ask for a bigger allocation. And then we ask our community, to commit and to sign binding agreements, wire the money into an escrow account, and that money goes to the sponsor.
Interesting. Well, very cool. I need to learn more about this because I feel like, there's a lot of potential here. And so unfortunately, we don't have a ton of time. We're already through our official 15 minutes. And so we do have to move on to the quick question round.
Okay.
But maybe we'll have you back in the future because this is definitely an interesting topic.
Awesome.
All right. So ready for the quick question round.
Okay.
Number one, it starts with education. So I need 2 recommendations, one for general life wisdom and one for real estate specific.
General life wisdom and something real estate specific. Real estate specific, I'm learning a lot these days from Moses Kagan, no relation, on Twitter. I think he has some really interesting content. Man, general life wisdom. I just subscribed to the Tim Ferriss blog, and he's got a lot of really cool podcasts. So that's what first comes to mind.
Nice. I like it. Yeah. Tim Ferriss, he wrote that. Well, he wrote a couple books, but man, I can't. Tools of the Titans. I used to have that next to my toilet, and it was my toilet book, and I thought it was pretty good. All right, next question. This is for your younger self. So let's go back to the Joshua who still had no experience in real estate. He was just looking at that property out in Berkeley Hills. Go to him, look him in the eye, give him one piece of advice moving forward.
Go for it. Have a bias towards action. Feel the fear and let it go.
Nice, man. Good wisdom, and it's been repeated on this podcast so many times. Again, if y'all are out there, you haven't done your first deal, just get moving, get that deal done. You will not regret it in the future. Next question is about your business. The first 3 positions we hire form the foundation of our business. So what were they for you, and would you do it differently if you did it again today?
What were the first 3 positions we hired for Bonfire?
Mm-hmm.
It was a head of data science, a marketer, and a co-founder. Bonfire has gone through some iterations and twists and turns, and we had to go through that. It was painful, but we listened to our customer, and the market told us what our product should be. And so I wouldn't have changed anything, even if we've had to go through a lot of pain and learn a lot of lessons.
Yeah, that's the thing about, well, pretty much any business. You have this idea of what it's going to be, but once you hit the market, once you hit reality, it always changed it. And you got to be adaptable. You got to be flexible because if you're too intransigent, you stick to what you originally thought of, you're not going to make it. So I'm sorry you guys went through the pain, but it sounds like it was worth it in the end. Totally. Moving us on to the next question. This is about the US. It's a big place, a lot of opportunity out there. Give me one metro you're most excited about investing in today.
I mean, I'm in Denver, and I love the Denver metro area for a number of reasons. I mean, there's just a lot of really interesting people moving here. It's entrepreneurial, it's beautiful, there's great access to nature, and there's just a ton of growth happening right now.
Yeah, Denver. I mean, we were talking about this before on the podcast. It's a beautiful place. I got to get out there one of these days.
Yeah.
All right. Next question is finding deals. It all starts with acquisitions, and that starts with marketing and finding good deals. So what's your favorite way to find good deals?
A way that's completely unscalable, and that is just through my relationships and asking really bright, talented people if they'll make introductions to other bright, talented people, and just building my network kind of one, by hand to hand, just connecting with people. But I know that's not scalable, but that's kind of for me so far.
But it's super effective. Relationships are the foundation of every business. And that's why it's so important to build them, especially, as you go. What I've noticed from my own career is things compound over time. And in 10 years, it's amazing the relationships you can build. And so it might feel small at the beginning, but if you keep doing it, it definitely grows.
Totally agree.
All right. Next question is, about your gifts. We are all given gifts that we uniquely provide this world. So what is your Superman strength?
Oh, I think there's 2 ways to answer this. One, on the business sense, the ability to sort of have a vision and see the big picture, but then chunk it down into very small pieces that are actionable and, just and follow up on them, I think is my gift. I think on the personal front, I have a desire to really see the sort of Buddha nature within every human and just see that everyone is trying to be the best version of themselves, even when they do kind of crappy things, like they are inherently good people. And that's something I'm moving towards. I'm not there yet, but that's something I aspire to be.
Nice, man. I like that. Yeah, it's definitely difficult to keep that perspective, but it's a good one to have. All right, second to last question. And this one is about your ideal deal. Ideal deal. I need to figure out a different way to say that, but we all have deals that we just, absolutely love. It's the golden goose for us. So what is the ideal deal that you would find if it plopped on your desk today?
Yeah, I'd be working with a sponsor who has a good track record, integrity, who is able to purchase an asset because of some hair on, for whatever reason, there's something distressed about it. So they're getting a really good purchase price. So we have a margin of safety, and they just have a great execution team. And it's just a compelling, transparent financials, it's stress test, and it's just, and then they're willing to work with Bonfire, and they recognize that we're, a startup, and, we're young and we're aggressive, and, and it's just a great kind of long-term, potential for great long-term partnership.
Cool. I love it. All right. That brings us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people have questions like I do about Bonfire, about blockchain, all that stuff. So what is the best way for people to get in contact with you?
Yeah, I'm very available. Joshua@bonfire.capital is my personal email. You can find me on LinkedIn, Joshua Kagan, Twitter, Joshua Kagan1. I'm around, so feel free to reach out.
Cool. Joshua@bonfire.capital. I will put that and the URL in the show notes. So if y'all want to reach out to Joshua, just click a little more in the description. It'll pull down the full description, and in there you can find those links.
You're the man, Gabe. Thank you so much. I really enjoyed this.
Absolutely. It's been a pleasure having you on the podcast. Thanks for hopping on.
Thank you. Take care.
All right. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right. Before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kagan Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.